All right, welcome everybody. This is John Person. Thanks for attending. And we'll get a couple things out of the way. We did a sound check, but since I turned the microphone on mute for a minute, let's double check to make sure the sound is fairly adequate. Number one, make sure that you can see something on the chart. Number two, and then we'll go from there. Thanks again, Gentle John. Appreciate it. All right, so where are we going to go from here? What are we doing? Well, the purpose of what PUG stands for even is the person's user group, just to give an idea of what we do with our indicators on various platforms. Last week we had an outstanding session with Cindy from Thinkorswim. And I know we had some technical difficulties to kick it off, but I don't think with a partial Irish DNA in myself, St. Patrick's week here, it should all be fine this week. So with that said, let's take a moment to check out this disclaimer, and then we'll get right into what we're discussing today, which is the concept here is about how I utilize my indicators in the markets to make good executable trade decisions, and what we've been using so far to handicap some fabulous trades in 2016. And I'm here to tell you, it has been a trader's delight. It really has. And I hope you guys have had a good time in the marketplace. Not that I'm sure some of you are familiar with a couple things over here on our web page. I'm just going to bring this into light. It's working in construction, but if you click on the Twitter feed here, you'll notice that we put out some pretty outstanding trades and also some pretty decent stock picks, and we've been doing that with some help from some indicators. And a lot of these indicators come up especially from looking at trading the long side in February. The first target we had in the SPYs was 196. The next one was 201. 202 handle to be exact. We've been putting out these tweets mainly for our room community and who are in our trading room but may not be there right then. And just to follow up, I think it's something that's been effective. So in the meantime, let's find out how we've been doing this, and then more importantly, what's going on with this market. Most of you could pick up a newspaper and find these statistics and find out what I think is kind of interesting. We almost scratched the surface here with the S&Ps back to zero, unchanged on the year. The New York Stock Exchange, by the way, this doesn't look bad. The NYSE only down just about the same amount of the S&P, but at one point this year, this thing was down about 7%, the NYSE. This thing came clawing back. What did not come clawing back, of course, was the Qs and, again, the NASDAQ composite. It's almost the beast of burden, if you want to say, of the entire market. I think what's helped the NYSE, of course, the transports, which are now year-to-date in positive territory. So in order to figure out where a market might go, we got to kind of ask ourselves where the heck's it been. And there's been a lot of debate of whether or not the stock market is in a 7-year bull trend. Most people forgot the fact that we had a whale of a correction in 2011, and it corrected all the way up until about 2013. In fact, if you even think about it or look at the charts correctly, or look at the charts, if I think before people start talking about a 7-year bull market in the media, you would note that the IYT, that's the transportation sector ETF. You can even look at the transports. In all of 2015, they were down and down hard. They actually peaked out in November of 2014. So we had a lot of different sectors actually peak out already. It didn't just start to sell off in January. So if anything, we need to kind of take a look in the content of what are we trading, why are we trading it, and where can our money be best served? And that's what I think technical analysis really does. I'd love to share with you on the notion of technical analysis. I don't have access to this minute, but I'm sure many of you, you've been around, you've seen me at presentations, you've seen me at trade shows. I generally put out some really outstanding information for the masses. And I came across this as a member of APTA, which is a technical analysis, kind of like the MTA. It's a American Association of Professional Technical Analysts, and I was in attendance of this last week. And I mean, there's some pretty smart people you may remember or hear about. The guy by the name of Tom Dorsey, for example, or Linda Raschke, or maybe myself, for that matter, and Greg Morris, for example. Some of the people there been around a long time. Charlie Kirkpatrick, and some of these guys have started. I mean, Charlie Kirkpatrick actually started the International Federation of Technical Analysis Society. So guys that have been in the field of technical analysis for a very long time, and it seemed to be a pretty popular topic. And I actually brought it up, and there was some good, strong debate about that. And the fact is that the market is not in a 7-year bull run. We can actually claim that the market's in a 44-year bull market since the 1973 lows. So if you went back and you looked at a quarterly chart, which I just might do for you today, you could, I mean, if you just, not a weekly or a daily, but a quarterly chart, you could see some of the blips and why we are in a pretty strong correction. And I'm going to tell you this, the majority of guys, a couple interesting facts, the majority of the guys were into Elliott Wave, for example. Some of them were into Gann. And the majority of them were all convinced that the market, I don't know if you're standing or sitting, but the majority of them were all convinced that sometime between 2017 and 2021, we would see a bear market correction and possibly as ugly as 30%. All right. So right now, that doesn't seem very helpful. And I look at that and I go, gee, that's kind of coincidence. That looks like a new presidential term. The most obvious would be, right? We have an election in 2016, and the new guy or the new woman or whoever is going to take over as president starts their reign right in 2017. So I found that to be kind of a funny thing that, boy, sometime in there, we're going to see a correction. And, you know, that makes sense because, let's face it, you can't see an economic machine growth go up without some kind of economic contraction eventually. And here's an interesting point that I cannot find right now at my fingertips, but actually Bloomberg did a study on approximately, I'm going to write this number in, 1,800 was the number. 1,800 recommendations, equally from technicians and fundamentals, technicians and fundamentalists. And out of 1,800 recommendations, more or less, they found that technical analysis and technicians did a far superior job in predicting market movement and direction within a 1-year time frame. Now, I think many of you that are here today use technical analysis in one form or fashion, otherwise you wouldn't be here today. I think the fundamental analysts out there might do a better job longer term, but a year less, they found that the technicians on those many recommendations did a far superior job. I found that to be useful information, and it helps validate what we do around here. And some of the forms of technical analysis that many of us may use, which we're finding more and more analysts to do, is relative strength. And of course, now you're starting to hear people do more and more in seasonal analysis. And seasonal analysis is a big thing. In fact, one of the guys that was presenting actually uses, and he was doing a thing about energy and natural gas and talked about the seasonality, and I raised my hand. I said, do you use a lot of seasonality in all your work? And he goes, yeah, I utilize this book, the Commodity Traders Almanac. I have that on my shelf. And I laughed and I said, well, you know, that's kind of what I partly co-created. and people are like, huh. I said, partly what I created was looking at a lot of commodities and stocks, more importantly. Back in 2009, if you ever have a copy of the Commodity Traders Almanac, in the month of March, by the way, on page 37, and I find this to be very relevant because it's right before St. Patrick's Day. Cocoa typically peaks before St. Patrick's Day, cocoa. Now, you and I don't really trade cocoa, probably, right? But you may trade Hershey's. And last week, our guest talked about Hershey's chocolate as a stock to play as it produces chocolate goods that are sold around the Easter holiday. And that's not just a U.S. holiday, that's a global holiday, right? I mean, it's a religious holiday celebrated around the world. And the funny thing is, chocolate Santas at Christmas time are sold on a global scale. So actually, chocolate is, and chocolate companies do generate profits when they have increased sales at specific times of the year. Now, if cocoa prices are cheap, what do you think goes into chocolate bunnies? Chocolate. So if cocoa's cheap, profit margins go up. Anyway, part of our contention when I did this project with Commodity Traders Almanac was to take stocks that were highly correlated or highly inverted correlated to underlying commodity markets. And that's part of what I think we're all looking for. How do we put an edge in our pockets? And when we take a look at what can generate an edge, one of my favorite tools, of course, is seasonal analysis. And I think we're all looking for this. Everyone wants to earn a fast buck, right? And we're all looking for instant rewards. I mean, if you're a commodity trader, you're using leverage futures or Forex, and you're looking for the fast buck. It's you live by the sword, you die by the sword. But I think there's been more and more teachings about using directional trades and using directional option long, either puts or directional bearish long puts or directional bullish long call positions out there. We just had today some pretty interesting moves, and one of the stocks that I didn't really trust, and I don't trust this stock, and for good reason, it's down 35 bucks today, is Chipotle Mexican Grill. Many of the folks in my trading room know I've not been a fan of Chipotle Mexican Grill. And then Valiant Pharmaceuticals, VRX, down about, I think, 50% today. There's every once in a while we get these big surprises in the equity markets, and how do we get access to picking the right stock in the right section? Well, to be honest, sometimes that's just being lucky. We have to have the right timing, and then most importantly, the right risk per trade versus your account size. There's an old adage in this business: whenever you're right, you're always in 1. Whenever you're wrong, you're in 100. Right? I mean, that was the old floor traders adage that we had. I think we need to look at combining the right indicators in your market analysis, and it's important for at least selecting the right index and sector analysis trades. And then what I like to do is, in this day and age, which we all know, you could look at an ETF, and an ETF might have a decent move to the upside, but it's the underlying stock that'll outperform any move typically, right? I mean, an ETF is a basket of products, and the stock is individual. So obviously, one stock is not going to affect the ETF a dramatic amount. So we need to best pick stocks, and how are we doing that these days? That's one of the questions, and here's some of the things that I've come up with. Number one, I took the time to share this with you yesterday. I think this picture really will put things in perspective. Where have we gone and started from the beginning of the year? Here's the hash mark. Every fund manager, they're out to beat the S&Ps. This is the zero line. This is where we start the chalkboard, the race all over again. This is that line in the sand. Utilities up as of, this is yesterday's close, not today's, but not much really changed a whole lot. But utilities year to date up 11%. XRT, and you can see all the various sectors, and I've outlined them and put them in writing. We only have 1, 2, 3, 4, 5, 6, 7, 8, 9 sectors positive on the year. Ironically, back when the world was falling apart, right around that January 18th time, when that famous bank came out to say, sell all your stocks, whoever that person or that bank said to sell all your stocks, well, if he'd said sell all your stocks in biotech, he would have been right. if he said sell all your stocks in utilities, he would have been real wrong and costly. And as you can see, a lot of the sectors like XRT and looking at IYT, man, that was like, as soon as they said that, that was like the low. And I mean, if you got a sector that goes from about 12% negative on the year and it's up to about 6%, that's a 17% rate of return in just those particular sectors from this zone to where we are now. So how do we identify what's looking good and what's looking bad? Many of you are familiar with my work as a pioneer in popularizing and creating indicators with pivot point analysis. In fact, I was one of the first people, I was the first person actually, not about, I was the first person of combining pivot analysis and candlesticks. And that was kind of a really neat thing. And we still do that to this day. And what I find is very interesting is pivots can be taken to a whole new level. And that's what we've done. If you can imagine that the S&Ps, the NASDAQ, and all the indexes are crashing and everyone says sell, they're going down. But all of a sudden, the majority of stocks that are contained within these ETFs, the majority of the stocks in these ETFs, if they're all trading at or near a pivot support, that's a strong factor of measurement. Let me repeat that. If I find in a market crash or a market decline that a huge assortment of stocks are near an important support level, like pivot support or a Fibonacci support or 52-week lows or some measurement of support, you got to admit that's what we use in technical analysis. We're looking at a measurement of something. We measure something. We're measuring in relative strength one product versus another. For example, the small cap versus the blue chip. We're measuring Pepsi versus Coke. We're measuring corn versus soybeans. We're measuring wheat versus corn. We're measuring cattle versus hogs, gold versus platinum, the gold-silver ratio, the gold S&P ratio. We're measuring something to get an idea that it's either overvalued, overstretched, or undervalued. And that is why we look at other indicators like breadth. Many of you are familiar with the tick or the trend or the arms indicator. We're taking a measurement of extremes. Again, the key word is measurement. That makes sense, right? So what I think is interesting, is we are able to take a look-see of measurement. And also, within that measurement, using one of my favorite tools, seasonal analysis. Seasonal analysis tells us that we will get a change in certain foreign currencies certain times of the years, certain commodities certain times of the years. How about this one? Remember copper? We did a presentation about a month and a half ago, and I know we had an individual that asked me, what about copper, Mr. Person? And I said, truly speaking, copper tends to bottom out in late December and goes up into the spring. Copper up over 10%. Copper up over 10%. And it wasn't just copper, and maybe because of the People's Bank of China, and it was right after that, we also saw another thing that happened. A tariff was imposed on steel imports, and we saw the steel and iron ore surge, and we saw incredible stocks like U.S. Steel, Steel Dynamics, STLD, Zeus. In fact, we actually even sent out a tweet regarding what we were picking up on our scans. So there is a way to measure products and jump on momentum on the right at the right time. And that's what I think is something that is pretty important if we can get a feel for the market. Now, the Ides of March. Typically, the Ides of March is not good for the market. And I'm here to tell you, at the APTA meeting, there weren't that many bullish market technicians on the planet. And, you know, you can't call the market a bull market right now. You can call the market, at best, it was in a trading range. You know, it sold off hard. It didn't take out the October lows. And it's now trying to get back to what? Square one on the year. And if somehow we rally in the best time of the year to be long, and maybe we eke out a positive net change and we get more longs in the market, I think possibly sell in May, go away might be a little bit more meaningful. But this, make no mistake, we've got Janet Yellen tomorrow. You got St. Patrick's Day Thursday. You've got the Bank of England coming out. I don't want to give a prediction, but I'm going to say if Janet Yellen raises rates tomorrow, I don't know. I think we drug test her for crack. I'm not sure, but it is my contention that the Fed is on hold. But what they say and how the market responds to that is a different story. How the market reacts to it is a different story. There's another major event this week, Quadruple Witching. And that is another, it's where we draw the line in the sand and the options expire. But the real case, the real scenario is that this quarter, we started through January, February, and March, and the quarter ends at the end of the month. And at the end of the month, we're going to get that phenomenon known as window dressing. There's a lot of fund managers that are in cash. There's a lot of shorts still left in the market. Number one, there are a lot of bears in the market. And my feeling is if we do see any short-term weakness like this week as a hold-off because of the quadruple witching, and it holds the market back, so to speak, I think the market has a strong potential to launch itself up into this late April time period. That's one of the strongest time frames of the year for a lot of seasonal scenarios that take place. And then after that, I think everyone needs to be on guard for the eventual, I think this will be the sell and may go away. After all, we really haven't had a fat finger market crisis like in quite a number of years. So I think the market is kind of accelerated its seasonality. We typically get the January break, and then we get a February rise. And the January break was a little over-accelerated, right? So looking at seasonality, I kind of look at and see the market if it's responding to its normal seasonal tendency, and if the moves are magnified or if the moves are muted. Another thing I like to look at is the condition of those moves. Are the moves on strong breadth? Is all stocks going up or a bunch of stocks going up? Are they going up but there's not huge net changes? Are they going up and they're at resistance already? And what resistance would I be talking about? What's interesting, I'm going to flip over to this chart real quickly, and I'm going to go over our trading system here. And this is my professional package, which I've shown people, and many of you are already, the exciting news is this has already been released. What is new about this radar screen that if you do have the Lifetime Pro package with TradeStation, this is what the PUG group is about. The Person's User Group, PUG. Person's User Group is we meet to discuss the advantages of how to use this important tool. Now, what you will see, it has been released. It's in the trading app store at TradeStation right now, and it has to filter through whatever it filters through, but we created it. It's been loaded. It should be launched within the next 24 hours automatically. Knock on wood. What does it do? First couple things it does. It generates a PPS buy signal. It tells you that the market is in a, this is the daily one, interval. It's in a 15-minute sell mode, and it alerts you to a sell signal. It also tells you that if it was in a sell signal, it just generates a new, and it'll flip into new signal or old signal. So it'll teach you that, hey, by the way, Oracle, for whatever reason, and here Oracle is, Oracle generated a 15-minute sell signal on the last bar. In this, it also has the daily, and you'll see where it says the daily trend. So basically, when you get this, guys and ladies and gentlemen, and it downloads, it is out. You have it. It separates the intraday. If you don't like a 15-minute and you want to change the 15 to whatever, you go up here and you can change that to a, at that link right here, and we can change it, change the interval to a 60-minute. That's where you would do on intraday right here. This tells you at the end of the day, are we in buy mode or sell mode? And we've broken it down to any big sector you want. If you look over here at CMG, Chipotle Mexican Grill, it generated a sell signal on a 15-minute basis and just trading lower all day. This is one that's been in a daily sell mode. If you take a look at CMG, kind of interesting. It'll tell you immediately down. You can see down. It's been in a daily trend, so you know right now by looking at a screen what is the condition. Here's a daily chart. You know the daily's in a sell mode. I know that the 15 minutes in a sell mode. And then if you take a look over here, what does all this mean? Real simple. This means here's the predicted person's pivot support. Here's the resistance. And we've color-coded it a little better now. Green means it's right at support. Gray means it blew beyond the daily pivot support. And you still get your percent of how far away it is to support and your percent how far away from daily resistance. All right, so we've changed the nomenclature so that new signal up down means PPS buy and sell. Up and down. What does this status mean? Bull, bull, bear, bear, bear. This means the pivot, the blue, above the moving average, right? That means if we're in a bullish bias, we would be looking for buy signals near daily support. So that's really cool. What's really important, let's go over to long term. You guys have been asking for this, and here it is. Note that we have the same thing. We've got now a monthly signal. How many stocks are gonna about ready to flip from a sell mode from a month to a buy signal? So the monthly chart, and if I go back over here and let's take a look at Apache, for example. So Apache is warning you that it's generating, if we close here for the month, it'll be in a monthly buy signal. It's been in a weekly buy mode. It's been in a daily buy mode. And you can hope for pullbacks to look for intraday buy signals. That's what the monthly signal warned you early on, how many stocks are about ready to flip into a monthly buy signal and flip from a bear trend to a bull trend potentially, right? More importantly, look what we've added for you guys over here. What do you think this is? Quarterly pivot support. So we've got our quarterly support and our quarterly resistance. Now, on a flip of a dime, I can sit here and tell you how many stocks are currently at pivot support for the quarter. That's January, February, March, 3 months worth of support. Where are the majority of stocks right now in relationship to their quarterly pivot support? Blue means they're at the pivot point. And so if we get out of restaurants, I'm going to go all the way out of energy. And I got this all the way down listed with all our top sector ETFs. I can find out that some of these, like for example, the XLF is at right here. And you see XLF, it's already at quarterly pivot support. What is quarterly pivot support? Quarterly pivot support is the green line, right? So we know it's back to quarterly pivot support. What happens at the end of this month? A new quarter comes out, and we're going to find out whether or not we're getting into a monthly buy at quarterly support, and maybe that'll give us a launch, or are we still in a quarterly sell mode, and we want to just sell the rally still, right? So from a longer-term perspective, if the trend is your friend, this tool is going to help us identify where we are longer-term, intermediate term, and shorter term. This is the most advanced system that I've seen on this planet. Not only does it give you buy signals immediately, and this is what kept us, and many of you guys have been in the trading room and were there. In January, when the world was falling apart, we were sitting there hold steadfast saying, listen, we've got just too many stocks we're trading at or near their monthly pivot support. How cool is that to be able to identify how many stocks are at pivot support? Now here's what's interesting. Look at all the sectors, guys, ladies and gentlemen. Look at all the sectors we got here. So if it was more bearish, they'd be trading where? at support. Everything, if you notice here, look at this. It's mostly gray and red. Red means it's at resistance. Gray means it blew through resistance. And blue means it's trading at its actual monthly pivot. That would probably be the biotech sector right there. Biotech. So this kind of gives me an idea immediately, are we in a buy signal? And if we are in a buy signal, are we at support or are we at resistance? What are the stocks at right now? The majority of stocks and the majority of sectors are already at resistance for the month. Now, remember, measurement's important. Measurement's very important. How many stocks are near 52-week highs? How many stocks are near 52-week lows? Is this market very weak? Obviously, the financials look decrepit. Why do I say that? Decrepit would be the content that they're not near their highs. Decrepit is they haven't really rallied. They haven't gotten back to square one at the beginning of the year. But we could take a look at other sectors and other stocks within those sectors. Like, for example, we could take a look at the semiconductors and say, gee, we're actually looking pretty darn, we're a little healthy because the semis are actually now positive on the year. We are not near the quarterly support. The semis actually are looking fairly healthy. So that's a little bit different, right? And when I go down the scheme of things to identify how many stocks are generating new freshly buy or sell signals, and I can just click on this and it'll immediately collate and generate, like, for example, Cabot Oil and Gas. It's going to generate, if it closes here, by the way, I said if it closes here, it's warning us that it's generating a new fresh monthly buy, but it's got to close here. This is a setup. It's not a trigger. A trigger is you wait for it to launch, and then if you get that buy signal and under the right momentum, under the right volume, you can make a determination if you wanted to go long, and then you know that, at least I have an idea that this stock is in a momentum shift to the upside. So that's what's really kind of cool, and we're starting to see more and more on a longer term monthly basis. You can see some of these are starting to fill in green here. So that's kind of really cool. Depending on your time horizon, this is a weekly scan right there, the radar screen, and it kind of tells us what we're looking for are changes of stocks or commodities like UNG that might generate new fresh daily buy signals or new fresh high close doji or PPSs with good volume consideration. Now this is just UNG and it's a different beast, but neither most analysts are looking for a way to say, show me stocks that are generating buy signals. And what I like to see is if I have a sector that's in a seasonally strong period of time that have come down to support, then I'm going to look for buy signals. I mean, that makes absolute sense. Now, we've got a ton of stuff in here, like, for example, looking at the top sectors and the breadth analysis, such as looking at, of course, advanced decline analysis and what the strength in numbers kind of content is within the different sectors. But the true power of what the new launch is for you guys is the nomenclature, the quarterly pivots, and that will all be available right now on the App Store. So if you're a current member, lifetime user of Pug Group, it got done. We promised it would get done. It took a little longer, but it is done. You've got short-term for stocks, for day trading and swing trading. You got longer-term identification. We've got it the same with futures, short-term, long-term. You got Forex, so foreign currency traders could look at the same thing, whether you want short-term as well as long-term, including the quarterly pivots on all the foreign currencies. So that's a very powerful tool, incredibly powerful. So armed with a little bit of knowledge of seasonality, this is pretty important. Now, there's been talk, and I wanted to share this with you because I think this is kind of really interesting, since I shared with you that COG was going to possibly generate a buy signal at the end of the month. So let's say something generates a buy signal at the end of the month. Does it have a typical seasonality increase to go up going into the next quarter? And I wanted to share with you something about crude oil. And I understand that the thought of crude oil going to 20 is still on everyone's mind. Supply is way high. I get that. But stop and think for a second. From a seasonal perspective, the best time of the year is up. And if I'm getting a bunch of stocks that are all generating monthly buys before I put my money to work in that sector, I want to find out, is there more time frame that the market typically has seasonal strength? And with crude oil, the answer is yes. So, depending on a couple things, the volume and the strength in numbers. I don't want just one stock to give me a new buy signal. I want multiple stocks to give me fresh buy signals. That will be important. So the seasonal tool is kind of important. Now, what in the heck is this? This is a very simple relative strength tool that shows us crude oil correlation to various markets. Now, brown is this thing right here, right? That's crude oil. And this goes back since, as you can see, December 31st of 2013. What is black? It's the NASDAQ 100. So the NASDAQ has been actually not really longer term correlated. We just started to really kind of look a little correlated here back in January when the market didn't have anything else to talk about, right? Then the NASDAQ started to kind of get that one-for-one almost correlation. But on the longer term, the NASDAQ's gone up and the crude oil's gone down. And look at the WU. We call the WU is actually the euro currency. The euro currency priced reversion of the reverse of the US dollar really hasn't done anything straight lined all year. I mean, it just hasn't gone anywhere. Look at the British pound. It's down. That's the light blue one. And then you could look at the Russell, which is the orange. And then we've included the Dow, which is blue, and then finally the SPX, which is green. Note that the majority of the stocks really haven't correlated with crude oil for the most part. Now, we did get a little bit of movement here and a little bit of correlation back in August, but after that, crude oil continued to go down, stocks went up. So it just proves a point. When my 81-year-old mother calls me up and says crude oil moves just like the stocks, then I know that the correlation is going to break. It's not always one-to-one. Now, let's take a little sample here. I think you need to be aware of these things. This isn't a part of the PUG meeting, but I'll tie it in just a minute for you. I want you guys to kind of take a look at, if we're making trade decisions and you're so used to the media pounding in your head that crude oil goes down, stocks go down. Crude oil goes down, stocks go down. That's not necessarily true. So I took a little slice of year to year. This is 12/31 of 13. Keep in mind, crude oil is brown. So crude oil is going up, and we did get a move up in the stock market early in the year. Then after that, crude oil kind of went up, stocks went down. Crude oil went down, stocks went up. Crude oil goes up, and stocks went up. Crude oil goes down, and stocks went up. We have an X factor. So there weren't exactly tick for tick, month for month. There are certain times of the year where we do see a correlation between stocks and commodities and particularly crude oil in this example. So I want everyone to kind of be aware, maybe there's a shift as we get out of the Ides of March. Oh, maybe this is what John's kind of talking about. Sometimes maybe when we get out of March and into this April-May time period, we might see a disconnect between stocks and crude oil. Maybe other sectors are going to pick up the slack, retail, home builders. Maybe we see healthcare. Perhaps we don't see a huge correlation with biotech, and crude oil. So maybe we need to be self-sufficient rather than dependent on the easy trade of crude and stocks. So let's fast forward. This is crude correlations for 2015. And as crude oil went down, I'm not sure you see a strong correlation there, but we did get a stock movement to the upside, and we saw in the same time period crude oil go down. And then crude oil went up, and I don't know, what did stocks do? Not a whole lot, right? So actually crude oil didn't go anywhere, and I guess you could argue that the Russell, the IWM, the small cap, outperformed everything. So maybe this shows us that certain years and certain time frames, there might be better ways of analyzing and looking for trading opportunities. I think this is very important because it does demonstrate, folks, that it's not just absolute, right? You just can't depend, and we might be coming out with a disconnect between crude oil. This is so far this year, and boy, I'm here to tell you, crude oil goes down and the stocks have gone down, and crude oil's gone up, and it's just been kind of almost mirroring effect, except for crude oil kind of outperformed, and on a percentage basis, I'm talking percentage here, not price. On a percentage basis, crude oil relative to the overall market has outperformed. Now, what's going to happen after the Ides of March, the March 15th, the option expiration, and as we get into the end of March going into next month and into the second quarter? I think that we do see, due to the fact that we've seen such a strong breadth in the markets, a good recovery in the the majority of sectors, and that was the first slide I showed you. We have actually 9 sectors that are now positive on the year. 9 sectors are positive on the year. Financials, not so good. Biotech, not so good. And I'm thinking that perhaps we need to be focused as we were, and you may go back and look at some of these tweets as we were talking about, hey guys, Caterpillar, the materials sector, XLB was on fire and then United Airlines, and then some truckers at February 1st. We saw industrial sector February 1st on 2/1. That's when we started to see some really neat stuff happen in the market. And I don't think a lot of people were really planning for as big of a rally. Now, I'm thinking we're going to see strength in numbers. That breadth is very important. And what I want to see, and this is what the indicator is going to help me with, look at that, and then increasing of position over time is if people are increasing, adding to positions. So as the market trends, if it pulls back and there's light volume on that pullback, and then as it accelerates again, volume increases, basically it's telling me it's in a period of accumulation. And so maybe like today, tomorrow, this week with the quadruple witching, it's going to be important to look for that pullback, because you know what could be really interesting is still note where are we on a year-to-date basis. I mean, we still have the Qs, the NASDAQ 100, negative nearly 5% on the year. If it only goes back positive on the year, scratches the thumb, gets break even for the year, 5% move in the Qs. I'm not saying that's definitely going to happen, but it's something I'm watching for, and we could easily see an upside move here after this week if the sell-off, if this little move that's kind of trying to shake the tree, so to speak, doesn't really materialize with heavy volume. And that's the key, I think, and also the strength in numbers. And that's what our system's going to probably help us pick out. So seasonal sector analysis is also important. We've got so many different stocks that are now, and sectors entering a seasonal strong period of time. That's pretty cool. So what do you think about thinking logically now? Think logically. What would I want to do? I want to run for daily scans to find buy signals near support. What kind of support? Well, first thing I want to look at is, since it's middle of the week, I'd want to run scans for how many stocks are generating intraday or daily buy signals near weekly pivot support. That's a pretty powerful scan right there. Now, since a lot of stocks are already at resistance, I want to try to run scans scans for sell signals near resistance. That would be a pretty cool scan. What if all of the stocks that I just shared with you on the radar screen that you saw were at resistance? Right? We saw a lot of stuff at resistance. Let me go back and share that with you. So let's go over here to the monthly chart. Long-term monthly chart. All right, here's where I want you to focus in on this quadrant right here. Right in here. And I really want you to focus in on that column right there. So what I'm going to do is I'm going to start off at the top, which I'm almost there. Here we go. So, I mean, literally, we've got, let's see, XLB, XLI, we've got XRT. So what does that mean? Materials, industrials, retail, the diamonds, the ITB, which is the home builders, the Russell, we've got transportation, we've got the insurance companies, we've got the regional banks, we got the NASDAQ 100, we got the semiconductors, we got the S&P 500, not bonds, not natural gas. We've got crude oil, USO. Let me make sure I'm on the right line, and I sure as heck am. I've got USO at monthly pivot resistance. I've got the XHB, which is the Home Builders Peripheral ETF. I've got energy, financials. I got technology, XLK, consumer staples, all trading at or beyond monthly pivot resistance. That's what that tells us, right? So how many, wouldn't it be nice that if we're at monthly pivot resistance, shouldn't we find a monthly pivot resistance, and this is the monthly pivot resistance, we should be forming what? Sell signals. Now, if all of a sudden we're not generating monthly sell signals, that means maybe we have a breakout above resistance. And if we start to see an accumulation occur in volume over the next couple of days, folks, we've got some solid upside. Now, here's what I want you to focus in on. Let's go over, and I'm going to take XLY because I just got it. So this is a monthly chart. Long shadow, long shadow, long shadow. What if the joke to human mankind, and let's face it, I mean, this is not an uptrend, right? This is a very choppy, chewy trading range. But what if out of these sectors has the ability to go back up and test the highs of last year or the top end of this range? And then we come in and sell in May and go away. And then we'll look to see what happens, right? So we could have the ability for the market to get back up just a little bit higher. What I'll be watching for, if we are going to start to sell off, if this thing's going to dive, if we're going to see the biggest correction to mankind since to biblical proportions, and I mean come all the way back down to, biblical proportions sell-off, then shouldn't I start to see more and more sell signals populate in this column, right, at resistance? Show me how many stocks are generating a new fresh sell signal at monthly pivot resistance. That will be the tell. And that's when we're going to look to see when this market starts to roll over one more time. So instead of sticking my finger in the air, licking it, and finding out which way the wind's blowing, I'm using factual information and a very powerful tool that's actually cheating and giving me an edge. And that's possibly what we're looking at. Okay? So if someone just asks, and you know what, I'm going to get to that question, Bob. I think that's a fabulous question about, you're going to love August 24th of 2015. That is an excellent question, and I definitely going to get that for you. This, Alex, on TradeStation, this works with 9.1. We prefer 9.5, though, okay? And this is a version I think is 9.5 that you're seeing on my screen, 9.5, all right? So just to help you with that, we're definitely going to help you guys with this. These questions. I like Bob's, shouldn't use your last name. I broke your anonymity. I apologize. But Bob Y, we're going to do this, okay? That's going to be fun. So let me just share with you something. Think about the power of thinking logically. Run for scans if you're bullish and a lot of stocks are all near support. How many stocks are generating buy signal? How many of you know what the HCD is? How many of you know what the famous person HCD I published over 12 years ago is? If you haven't read about the high close doji, you guys probably, if you do know about it, you know it is like cheating. It's a trading system. It tells you, 1, when to enter. It tells you, 2, where your stop loss goes. And 3, it kind of tells you the length of time that you're going to be right. And number 4, it tells you about what your holding period is. It's a system, actually. People kind of bypass not knowing that it really tells you to get in at a specific, on the open or the close of the, or the close of the open of the next session, tells you where to place your stop. Can you imagine you have scans that alert you to high close dojis on a daily and a weekly basis, and all of a sudden you get tons of high close dojis at monthly support? That's a buy signal, by the way, okay? So besides a PPS, I said run buy signals. I didn't tell you what the buy signals were. Now, if we're bearish and we think the market's run its course, we should be running scans for sell signals near resistance, like low close dojis and PPS sell signals. And if we start to populate stock after stock after stock after stock, and they're all pointing down and they're all at resistance, baby, that ain't a good thing. Start buying some puts quickly. All right? That's what's pretty neat. That's what's pretty neat. That's thinking logically. Now logic is often ignored. Logic is often ignored in life, and trading, logic is often ignored. Now, I actually shouldn't even say this, but this was in Zurich, a conference room at a bank, and I was giving a presentation, and we joked about this, and it said, no food, no drinks, only water. And I had to sit there and I go, no drinks. Isn't water a drink? I don't get that, right? Last I checked. So the logic of whoever put that, maybe they're thinking, don't bring any scotch, no alcoholic beverage. I don't know. It was kind of funny. It was humorous. We all had a laugh. But, I mean, I think that I haven't seen that slide in a long time, so I just had to present that to you guys today. Because it's true. Logic is sometimes thrown out the window because we're in a hurry. We forget. I think in a seasonally strong period of time, don't we want to run scans for buy signals near support? In a seasonally weak period of time, don't we want to run scans for sell signals near resistance? Oh my gosh, what a concept. Anyway, this is what I wanted to share with you guys. That whole concept of running scans, right? And here the power of the lifetime feature is we run scans. I want to share some of these. How about a scan of a continuation pattern? You miss the buy signal down here on a weekly basis. The market runs up, but maybe it gives you a week or two pullback, right? Wouldn't you want to go with a daily buy signal when the weekly's in a buy mode, right? So this is Analog Devices, which today ran another daily buy signal. Volume's looking okay, longer term volume's looking okay, and then, hey guys, look what's showing up on my radar screen. These things highlight a monthly chart. Those are dojis. They're light blue. We color code this stuff. So we have color coding that defines whether it's on a weekly basis. Let me show you a couple stocks that we picked out, and I know this because we were trading them. We actually picked out on February 1st a weekly high close doji in an obscure little transportation company. It was actually a trucking company called Roadrunner Transportation. And that was a phenomenal trade. It was only up about 56%. It generated a weekly high close doji at quarterly pivot support. Come on, man. Come on, work with me here. What an idea to run a buy signal at quarterly support. Who would have thunk this? I'll tell you who. We did. So look at this. High close dojis for the week. Try to run scans. So think about what we've got here. Try to run me a high close doji. Okay, here are the high close dojis, dailies. Very good. Well, you know, it is a high close doji. This is Nordstrom. Boy, why it'd been nice if we got that trade set up a couple weeks ago, John. But here's what's nice. This is a buy signal, and it is in a weekly buy mode, and it generated 2 months ago a monthly high close doji. So fractal in nature, volume's picking up. Seasonally, it's looking good. And then you have some pretty strong volume accumulated with this move. The sector's doing pretty good. Look at high close doji number 2. Now this is really important. Can you imagine running a scan? First and foremost, I want to run scans to help me find the beginning of a trend. That might be the high close doji on a weekly basis, down here at a daily basis near support. I want to look for a trend continuation. I want to look for a market that's generated a longer-term uptrend and it's pulled back, and now it's starting to move up again with the dominant trend, right? Wouldn't you want to run certain scans under certain market conditions, right? So I want to run certain scans at certain times, and now if I'm looking for a short or an intermediate or a long-term scan, I can do that. Stop placements, pivots, it's all put together in a logical fashion. Find out how many high close dojis on a daily basis when the weekly is in a buy mode. Well, that's pretty important stuff. How many stocks are generating these weekly high close dojis? Now, whether you can't take every single trade, so we got to kind of filter out some of this stuff. But this has been a very dynamic tool. It's almost been like cheating. In fact, what we do is almost on a weekly basis. Many of you get this in the planning and scanning. This is my weekly observations. All right. We put out, and in fact, maybe I could cheat, and I'm going to go to one of, if I may, if you don't mind. This is something that I put out on February 1st. Now, let's go over here. I think I shared this before. Look when it was written. On the weekend, January 31st. So it wasn't after the fact. It was before the fact. So if you understand a few things like breadth, volume, seasonality, things like that we're looking at. By the way, we're looking at stocks. How many people understand high close doji again? Look at this. Weekly bullish high close dojis. 67 stocks populated are all seasonally strong. So CBS, Discover, CVX, PXD, RIG, CA, CTS, Eaton, ETN. That was a huge trade for us. American Airlines, Swift, there's Roadrunner right there. Target, CRS, and HB Fuller. Those were some pretty powerful setups that launched us for the month of February. And every week's been something new. So not only do we put that out, but then, we look for markets that hopefully let's see some pullbacks, and then here's the seasonal strong period of time. So these are kind of the things that we put out there to try to be selective, to put factual data. Now, once in a while, you're going to look at a trade and a day trade, and maybe you're stalking Chipotle Mexican Grill, or maybe you're stalking VRX. That's VRX. I mean, VRX is just Valiant Pharmaceuticals, monthly sell signal, weekly sell signal, and it's just volume. It's just an ugly trade. It's just an ugly trade no matter how you slice it. Then you take a look at CMG. CMG, longer term, monthly sell. It's in a weekly buy, CMG. CMG today, it's been in a daily sell mode. So volume on this rally, you got to see another little thing that we teach people is this little volume tool. The market went up. Which way is the volume gone? Sideways. That's El No Goodo with an exclamation. And besides, you buy a burrito, you get sick. I mean, what might clean out your intestines, so you got that going for you. I don't know. I'm not a big fan of CMG, and I think they had some pretty poor after-market response to the downside. This is not a pretty stock whatsoever. And you know what? Maybe you buy it off a short term, but man, when you start seeing low close doji PPS sell signal, that's not a good sign. Now, we had an individual that said, hey, show us about, and I don't know if you want me to show you the weekly chart on the spiders going back, which is kind of ironic, but look at the quarterly pivot support last year. Look at the sell signal ensuing low close doji on a weekly basis with the spiders. And as you can see, you know, one of the things that we actually talked about was, folks, we can't really get into the long side. Right before we left for the beginning of the new year on our vacation, was we needed to get the market over that gray line. It's a last conditional change. Many of you, if you read my books, you know what last conditional change is. We didn't talk about that. We don't have a lot of time for that today, but you'll see these gray levels. If the market's in a sell mode, that's your level of where to place your stop above that level. If the market goes into a buy, you place your sell stop below that level. And if you're on the right side of the market and it starts to move up, you place your stop loss until that level is taken out. So even in these spiders right now, we're still fairly healthy until we close and crack 197.38. And I know that's a long way away, but considering the Ides of March, we could see a pullback in the marketplace. Wouldn't surprise me, and that's what I wanted to share. So we did have somebody that said, show me August 24th. So hopefully I didn't just delete the daily chart. I'm hoping I minimized it, but no avail. We'll go over here. August 24th. August 24th. Sell signal in August, just right before kind of the market not really doing all that well, volume not doing that well, and again, straight down. You know, high close dojis coming back up. Looking at the market, it's been a pretty wild mover, and our indicators have been doing us a lot of justice in this marketplace. Bullish convergence, a lot of things to teach people. But overall, this is just a daily chart on the spiders. I think that would be a better indication rather than using the futures due to rollover. But again, we could look at the rollover too. We could also look at individual stocks, because I know the room was actually short at the time, Tesla, and that was a big trade back in August. It was this little trade right here that set us up for a downside move. And then again, right there, big time. That was August 24th. This low opening. We had a big session in the room. We told everyone, boys and girls, this market's going to open a lot lower real fast. Have your orders in there to cover your puts, baby, before the platform is bogged down. Another little technique about how to take money out of the market. You got to have, if you're in a trade and you know the market's going to be opening in your favor dramatically, put your orders in the dome. At least theorize what your trade should be worth on an option basis before the market opens. That way, you know, the one thing that each and every one of us are succumbed to is what? Internet working and the platforms working. And on real busy days when everything's moving and everyone wants to trade, that's when Murphy's Law takes over. And when you least need something to break down, that's when your biggest chance of failure is, because things break down. Anyway, another example, not that you could see clearly, picking out Tesla. Again, a quarterly, monthly support, excuse me, in this case. This is monthly pivot support. Buy signal, and I'm going to show this to you. Can you imagine? Show me how many buy signals at support, and is volume rising. This is Tesla, which had a little stratospheric little move here, almost like a very strong V bottom right there. Obviously, we are beyond monthly resistance. What do you think we'd be looking for? We want to see maybe we get into what? A sideways market. We're coming close to what? The end of the month in 2 weeks. If it launches up a little bit more, and then we'll be looking for maybe overbought market conditions. It's starting to look a little tired with the momentum indicator, but we do not have a sell signal yet on a daily basis. That didn't mean to get through the analysis on Tesla. Just thought I'd share that with you. That was that question. VT, if you go, several of my books were written. You can find them on Amazon. You can go check around. One's called The Candlestick and Pivot Point Trading Triggers, and a phenomenal book that I think everyone will benefit from, that explains stock sector seasonality, breadth analysis, the right volume analysis to use. You can find it on Amazon. It was called Mastering the Stock Market, High Probability Market Timings. Phenomenal book to read through if you want an introduction on my work. That to me is just the epitome of just really smart ways of identifying trades for stock traders in the market. Those same concepts work in here. So I wanted to go through and for PUG members, let you know those scans that we have, the JP scanner, fabulous scanners that we've created. More importantly, it is out. It's here. Hip, hip, hooray. Lucky St. Patrick's Day. It is here. It is done. We have the radar screen package. The nomenclature changed. We have the quarterly pivots up. That's number one. Fabulous stuff. So this should be available for you guys. The work was done. It's been completed. Again, it's through the App Store. However long it takes for them to filter and do what they do, I don't know. It's not my App Store. But it was launched this morning, and it is out, and it is done. So I'm excited about it because it really does help clarify exactly, just by a click, on these headers, I can find out, if everything's green, that means they're in like this, XLK. I'm on a daily trend. It means that if I just expand this up, you can clearly see that we are in a buy signal on a daily basis, the XLK. This means it's been past tense in a buy signal. Now, let's take a look at this. What does it mean when there's a double green? You guys see this? PUG members, do you see this? There's a green and there's a green. It says up and it says up. What the hell does that mean? Simply means this. It means that the buy signal was just generated in the last bar. So you need to understand that the last bar, not the current bar, the last bar. It means one just generated 1 bar ago. It's not in a trend. It's a fresh buy signal. Because sometimes you get a buy, and then you can examine whether or not the market is, how many bars ago was it in a buy? Are you coming early to the signal, or are you coming late to the party, right? So that's kind of interesting, and that's part of the whole why we have the daily trend and the signal. If it's black, it means simply the market, like XLI, I'll click on it. If it's blank or black or blank, it means it's been in a buy signal several days ago. So proof in the pudding, there it is. Fabulous approach to trading the market, institutional grade. I'm here to tell you that some of these people that are trading institutional money, you guys have no clue the advantages that you have over some fund managers. You just don't know. I think the playing field was leveled out. The playing field with this system is beyond approach. It has everything you need at your fingertips. Signals, setups, condition, breadth, relative performance, scanners. Try to find anything you want, any time frame, and then maybe you want to customize it. So I didn't get into this. I know we did this before, but check this out. So I want to go into a buy signal, and I want to run a scan. If I hit format, and I want to run this, and right now all I have to do is click on the plus sign, and it says, if you note over here where it says daily. So I want to run in whatever universe I want to select. I want to run a monthly, I want to run a separate weekly, 60-minute, a 15-minute. I want to run, show me how many intraday high close dojis are going to populate today, and I can hit run. And I'm formatting that to run right now. Find me how many stocks are generated or did generate in the last hour of trading, any fresh, brand new, high close dojis. And I'm running the S&P 500. So I can customize and just run that on an intraday basis. So if I'm seeing something like maybe a lot of stocks coming close to weekly pivot support. So let's say, for example, short term, I'm here and I've got, this is kind of like what's really cool. So this is the weekly pivots. right? And this is support. So the market's run up, and it's pulling back, and a lot of stuff is pulling back to maybe weekly pivot or the weekly pivot support. So we get a pullback to weekly support. I want to run how many stocks are giving me an intraday buy signal at weekly support. Now that makes sense, right? That's a logical, and all of a sudden in the S&P 500, if I find out, oh, by the way, I'll change this over to a 60-minute chart just for, and sure enough, at the end of the day, we had a 60-minute high close doji. How do I know that? Because the doji is colored blue and the high close doji is colored orange. So I know, for example, at the end of the day, these names in the S&P 500 all generated at the last hour little 60-minute high close doji. This is Baker Hughes, by the way. So Baker Hughes, BHI, at the end of the day, had a little bit of run, generated a PPS buy signal early in the day, and in the final hour, bang, generated a high close doji. Might see some upside follow through in the morning. So now I can kind of get a better look at if this market was generating the quality of buy signals at certain level. Again, logical measurements, taking measurements. Instead of giving me a, well, what about a Fibonacci correction? You know what? I want to know, are we generating a buy signal emphatically at a predetermined support? And are those predetermined support and resistance levels valid? And more times than not, you'll find, yes, they are, right? That's why we utilize the technical analysis of pivot points. So therefore, this is something, if you want more information on it, you can click that link. That's our website. Now, this is the link that I just sent. You can go straight to, if you go to Person's Planet, and you go over here to Indicators, Indicator Overview, and you go to TradeStation, Learn More. And you can take your time to go through and learn all about the indicators. We've got some videos, everything that's in there. We haven't even touched or scratched the surface. This is a PUG group meeting, just to alert our members that have, and we meet every month, once a month, to discuss new ways of using the tool, new ways of uncovering what's all in there. So with that said, the individual who had asked me about 9.1 and 9.5, there it is. We do have the versions for both. So if you are a TradeStation user, there's how you can get it. Now, let's say someone has the Genesis, and they said, John, I had Genesis. Well, this was a different program. We give a deep discount to anyone who wants this, but it is, and I don't want to insult my Thinkorswim friends. You need to have a TradeStation account. But no one says you can't use the TradeStation application. Open a TradeStation account. They'll give you a credit for the product itself in commission rebates. That's another thing that's pretty fantastic. And then trade with, options, whichever brokerage firm you choose. But this is a phenomenal package to give you guys a heads up and alert in the marketplace. So yes, you do get a deep discount because we understand that someone has a second license, but there are different things in here. The scans are different. Nobody has the last conditional change. This momentum histogram, which many of you already know about, but it's not about a part of today's team. The alarms, the alerts, the triggers, the scans, all of that. The last conditional change, as we use for trailing stop levels, the commitment of traders data, the advanced decline analysis, all of that is included, especially in the weekly, daily, monthly, and now quarterly on the radar screen. And that is a huge move, I'm here to tell you. So it's kind of cool. It is phenomenal, and it has just been picking out some really dynamic trades. And if you go back and, like I say, you go over to that the home page and you look through some of those tweets, you'll notice that it's not like we're throwing darts at the wall. We've gotten some pretty decent stuff off of the scans. Notable strength today: Intel, Lam Research, STX, Red Hat from last week. And you know what? These trades still looking as positive performance. Red Hat was one that populated on the scan. Nice little upside. So, you know, besides looking at individual stocks, how does it work? This was one on First Energy that popped up. Range Resource, I mean, oh my God. I mean, that was a 50% increase, up 11 bucks. I mean, just one after another. If you'll notice here on these tweets, weekly HCDs. You know what I'm saying? I mean, here was something that we did, that we bought some SPY March 5 weekly calls, and we got flat as we came close to the 202 target. That was on March 4th because the market had just ripped, and it was a lot of stuff was near monthly resistance. So these are some really powerful stuff that we've been putting out that I think if many people understand what HCD and understands LCD, this was a stock pick it was a hotel. It was up 11%. Just a very, now that's stock. This isn't options. This is just a stock. And by the way, just looking and working hard, you know, back when it was not really popular, but Zeus and U.S. Steel and S Steel, that was on March 2nd. We just saw that populated on our intraday scans. So I send these tweets out to our members. By the way, here, back on February 29th, Frontier and Nordstrom's, and we just saw Nordstrom's, how much higher Nordstrom's was all weather already, as well as wind. All of this stuff was populating, and we post that on our tweets. Very powerful information. So if you want more information, you want to say, John, I want to check this out. I'm a serious trader. I put out serious analysis. And if you want to learn more about a software, if you're interested, if you think you want to take your trading up and you want software that can help you identify stocks on the beginning of the trend and really have a testifiable platform in front of you and look for trend continuations, know where to place your stops, then I tell you right now, take a test drive of this. I know you can get a trial as well. And with that said, the link, once again, is right there. Okay? So there you have it. All right? Alejandro says, my brother has your indicator. Can I get a family? It works great for him. Absolutely, Alejandro. I think we can give a family discount. David K asks, does the radar screen show HCD LCDs? No, David, that would be a strategy that has not been added. That would not be a part of the radar screen that we've put so far, okay? So, in fact, we do have a little thing that for those that are interested, this comes with obvious teachings, because we just don't let someone just hang out without telling you how to use the darn thing. So we definitely include, if you go over here on the indicators and the overview on TradeStation, we include a trading course in there, which is very important, how to get this going. So you absolutely will get a trading course. We send our Candlestick and Pivot Point DVD, which is a very, very, I think it's just an awesome course. It's stood the test of time. Obviously, we've put something together. So we will include that in your purchase, Alejandro, absolutely. Okay? So I wanted to say thank you all. And for Pugs, congratulations. We've taken another breakthrough. And this is actually the course. So for new subscribers, if you do subscribe and you are interested in the lifetime, this is the course that you would get, the seasonality and pivots right there. So the TradeStation Pro Fund Lifetime Package Trial, click on the link that I've sent out. If you're interested in that, call our office. We'll walk you through it, and we'll also include the trading market reversals, seasonalities, candlestick, pivot DVD course, right? So that's one of the things we're definitely going to include for you guys, right? With that said, I hope we have a fantastic, it's going to be an interesting day tomorrow, right, with Janet Yellen. It's an interesting week. We had a lot of stuff going on. We're down here in Florida, so I'm in ground zero of the big Super Tuesday debate for, of course, stuff like that. Alan asked me a question. Does it work? Or excuse me, Stan says, does it work on futures? Stan, you know, if I may just share this real quick here. When we go through the scans, you can change a scan. I've just set it to, let's say, for example, buy signal, right, and format. And if I want a symbol universe, all right, I unclick this, I go over here, give me what I want. I want stocks, I want this, I want futures. I can change all futures, I could change electronic futures, I can subsector it in anything, industry groups, anything I want, I can run a scan for if I have that inkling. Now, how would you get that idea? So you go back over here and you see these tabs. Long-term is daily, intraday, and then futures, short-term, intraday. So if you just had this radar screen kind of on your desktop, okay, and you can always add a symbol. Add a symbol. So moral of the story, what you're looking at is interval. Show me a 15-minute buy signal. What do you want to trade? Corn, beans, wheat, cattle, hogs? We use the electronic minis. You can change those symbols. Go at CL. Now, if you want to trade on TradeStation, you have to have the nomenclature of the exact month. Because of rollovers, we just have the continuous at sign on each one of these, and that gives us our signals, whether it's a new signal, how many new signals were generated, what the daily signal is, and then if we change this by one click, look at this, futures long, I can find out how many new signals, what is the condition of the market, are we in a weekly buy or sell mode. All the equities are still in a weekly buy mode because they're up and green. All of the financials that we have, and you can add whatever you want, as you can see, are in a weekly sell mode. They're in a daily sell mode. And so therefore, you know, in an intraday, this is the daily list that I'm on right now. So you can kind of have an idea on one look-see, where are the relationships of all the commodities? The same thing that I just talked about for equities, where are they in the world of commodities? So very powerful tool for, yes, stocks, futures, and Forex. It's all right there for you. It's pretty cool. It's just amazing. I wish I had this 35 years ago. We've been doing pivots for 30, how many years now? 32 years. I've been tracking pivot point analysis for 32 years, and I used to do this stuff by hand. And to find a system like this that gives me buy signals and momentum and can give me a list in a matter of seconds, just nanoseconds, it's incredible. So I thank you, Stan, for your question there. I think that kind of takes care of a lot of current customers, clients like David. Thank you very much about the asking about the HCD, LCD. But we finally got the quarterlies up. The new version is there. It's been launched. It's just a matter of getting it from TradeStation's trading app store to your desktop or laptop. That's it. Okay, Gary, good seeing you. Oh, I am so glad for you, Gary. Gary N. I'm glad you played golf. Man, man, good for you. Awesome. Thank you so much for posting. That made my day. Thank you. So with that said, if someone has a question and you want to talk to us directly, just simply call the office, 561-655-1881. Go to our website. Just say, hey, I'd like to see what the hell John's talking about a little bit more. Contact us right there. Go to the Person's Planet. Just, you know, send us your info and just your message. Give me a call. So that way you can get some information where we are, all right, or what you want and how we can help you. Whether you want me to call you, Mary, whatever, and we'll get you set up and we can get you taken care of. With that said, that does conclude tonight's or this afternoon. It was recorded. Pretty cool stuff. And then don't forget, I mean, if we're seasonally strong and the market after this little Ides of March, this little quadruple witching, I think the next 6 weeks are going to be pretty fun, that's for sure. And we have a lot of tools to help us find some fantastic trading setups. And that's what we're going to be looking for. So with that said, everybody, Thank you very much for attending. I hope you got your money's worth of today's presentation, at least an idea of, going back, if I may, just to think about this. I thought, I don't know about you guys, what you thought about this, but you know what? When crude oil, and they say that crude oil is generally connected to the market, I mean, July crude oil peaks, that's good for the stock market. In January, you get that new break in the equity markets, the January sell-off typically. Crude oil normally is the best time of year to buy it is in late January, early February. Not all years are the same. Here's a year in 2014, stocks nosedived, crude oil went up. I mean, it's not something that you can sink your teeth in and be relied upon every single year. So it's just, I think the market fixated this particular time. Let me tell you a quick story. Here's 2015, same thing. Boom, down on crude, up on the Russell. Small cap, up on the NASDAQ, right? So how can you rely, this is 2015. Years ago, I told this to a mentoring class we had here in January, and many of you are familiar with Stanley Dash of TradeStation. He came in. And Stanley and I kind of reminded when we were listening to the, people talk about the correlation that was so strong. I said, there was a time back in the day that I used to trade. You're going to like this. It was the silver. I don't know if you guys have been around or if some of you might remember this. Silver soybean correlation. Okay? Silver soybean correlation. I mean it, seriously. If silver was up 5 cents, soybeans were up 5 cents. If silver was down 10 cents, beans were down 10 cents. It was just exactly, we don't know why, it just did, and then all of a sudden, bang, it fell out of favor. So certain markets, it's just traders just, I don't know, they just, unless there's a lack of real substantive fundamental news, they tend to migrate towards trading something until that correlation or until it dies out. So don't be dependent. Be your own analyst. Definitely make sure that you don't get in the trap of following, because we coming in to a time period in April after this Fed meeting tomorrow, and April, May, we're coming into that time period where typically stocks are very strong. Typically you get changes in demand. You got holidays, travelers, spring break, Easter, a lot of stuff. You got to send little Johnny to get a haircut. He's got to put new clothes on. He's going to Easter Sunday Mass. He's going to Passover. Trust me, folks, there are changes. People buy homes. They move. Their leases are up. Transportation, ... Things start to move around. So with that said, thank you all for being here. Keep in mind that's part of what supply and demand is all about. We try to look for great trade opportunities in the market, one trade at a time. Thanks, everybody. Have a great evening.